Welcome to The Explainer. Today, we are diving right into one of the most talked about and honestly one of the most treacherous moments in any trading day, the London Open. It's a time that is just absolutely packed with opportunity, but you gotta know, it is also riddled with traps for anyone who's unprepared.
So why is it such a double-edged sword? Well, for a lot of traders, the London session looks like a goldmine for these really predictable breakouts. It's that moment when the market finally seems to pick a direction and run with it. But it's also the exact same place where traders get caught in these super frustrating traps, leading to quick losses and, a ton of confusion.
The basic idea is actually brilliantly simple. All you do is you find that trading range, that little box that forms during the quiet Asian session, and then you get ready to trade the powerful breakout that happens when all of London's liquidity just floods into the market and shoves the price right out of that box. But what makes this moment so incredibly powerful? Well, get this. A massive chunk of the world's daily Forex turnover, we're talking roughly 38%, flows right through London. So when all those traders show up to their desks, they unleash a wave of trading volume that really moves the markets.
And this creates, a perfect storm. We see this huge surge in liquidity from banks and big funds, and that sparks a massive volatility spike. This often causes a major shift in the market structure, turning that sideways chop from the Asian session into a really clear trend, all inside the super concentrated window that traders kind of dramatically call the London kill zone.
Okay, so let's get into the nitty-gritty here, because this, right here, is the crucial mistake that most traders make. They see that Asian range, and they're only thinking one thing, a simple breakout. They're only looking for one possible outcome. But they completely fail to consider that the market could be setting a trap. They're only seeing half the story. In this slide, this really lays out the two fundamental paths the market can take. Success here isn't about guessing the direction of the breakout. It's about figuring out the market's real intent. Are you watching a reversal, a classic trap cooked up by the big institutions to hunt liquidity? Or are you seeing a genuine continuation, where the real move is actually just getting started? All right, let's start with that first scenario and really break it down. We're going to dissect the classic London trap. This is the reversal play that catches so many traders completely off guard. So, the setup for the trap follows this really clear three-step pattern. First, you define your battlefield, right? You mark the high and the low of that Asian range. Second, you just got to wait. You patiently wait for that initial breakout, the sweep that's designed to grab all the stop losses sitting just outside the range. And third, and this is the most critical part, you look for confirmation that it was all a fake out. So what does that confirmation actually look like? Well, you're looking for a really powerful candle that just slams right back inside the range, a lot of times on high volume. You're looking for what we call an inversion pattern, where the level that was just broken, let's say it was the ceiling of the range, now acts as a new resistance, rejecting any attempts to break back out.
Here's a perfect example. Price pokes just above that established Asian high, right? It's luring in all the breakout buyers, triggering their orders. But then, bam, it slams back down with force. It traps all those buyers, and it signals a super high probability short trade for anyone who recognized the trap for what it was.
But what if it isn't a trap? Sometimes the breakout is the real deal. So let's look at the second path, how to spot and ride a genuine trend continuation. Okay, so here, the setup's a little different. The context from that Asian session is absolutely key. A lot of times, the market has already done its homework, It's already tested a key price level overnight, so when that London breakout finally happens, it isn't some hesitant little poke. It's a clean, decisive move that has real conviction behind it. A real breakout just screams strength and commitment. You'll see these strong, full-bodied candles closing firmly outside the range, and they're backed by increasing volume. And crucially, there's no immediate reversal pressure. The price doesn't snap back, it just holds its ground. And in this example of a failed trap, you see what happens. Traders who tried to short that initial breakout, they just got run over. Why? Because they missed all the warning signs. The breakout candle itself was weak, volume was actually decreasing on the move, and the market was basically telegraphing, hey, this is a continuation of the trend, not a reversal. So, look, whether you're hunting a trap or you're riding a trend, your long-term success is going to hinge on a set of absolutely non-negotiable rules that protect your money and keep you in the game.
This is so key. I'm telling you, the best trade you'll make is often the one you don't take. If that Asian range is super wide or there's a huge news event about to drop, the smartest move is to just sit on your hands and wait for a better day.
All right, first and foremost, risk management is everything. You should never ever risk more than 1 to 2% of your entire trading account on a single trade. That kind of discipline is what ensures that one bad trade can't just wipe you out.
Second, your trade selection has to have a positive edge. That means you only take trades that offer a potential reward that is at least twice your potential risk. This simple rule of thumb basically ensures that your winners are going to more than pay for your losers over time. It's just simple math.
And finally, you need a time stop. Look, the highest probability window for these kinds of setups is typically in the first few hours of the London session. If your setup hasn't triggered by, say, 11 a.m. GMT, that magic window has probably closed. It's time to cancel your orders and just walk away.
And please remember, the mental game here is just as important as the technical stuff. You have to have the patience to wait for your specific signals to show up. You need the discipline to stick to your plan no matter what. And critically, you have to control that fear of missing out, that FOMO that leads to chasing bad trades.
So to wrap all this up, the secret to mastering the London Open isn't some magic indicator or a single rigid strategy. It's really about developing the skill to read the market's narrative each morning, to understand the context so you know whether you should be hunting the trap or riding the wave.
And that's our explainer for today. But now, we really want to hear from you. Have you been caught on the wrong side of one of these London Open traps? Or have you traded one successfully? Share your story with us down in the comments below.